Hello traders, welcome back to the Forex gig where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about order flow pattern, a method professional traders use to read market movements with precision. You will discover how institutional traders leave their footprints in the market, and you will understand this pattern can transform your trading approach. By the end of this video, you will understand how to spot key order flow signals, interpret market makers activity, and identify high probability trading setup. Now, what do we understand by order flow? Order flow is your window into the market through supply and demand. When you understand order flow, you see exactly where buyers and sellers are placing their order in real time. Think of it as watching money move through the market. Every transaction, every trade tells a story about market participants' intention. This is basically what order flow is all about. Bearish pullback, the bearish move, the pullback to a level, bearish move, the pullback to a level, bearish move. If you can check other charts, we can see as I've marked it out, this is a bearish order flow, while this is a bullish order flow. Why when price move and break structure as it moves along the way. Look at what you are looking at here is a visual representation of buying and selling pressure. The green zone shows areas where buyers are in control, or the green zones, it shows areas where buyers are in control, while the red zones shows where sellers are dominant. Notice how this zone form pattern that repeats throughout the chart. The red and the green zone, red, green zone, red, green zone, showing patterns that reoccur all around the chart. In forex trading, order flow reveals three critical pieces of information. First, it shows you the actual volume of trades at each price level. Secondly, it exposes institutional trading activities which often move the market. Thirdly, it highlights key price level where large orders are placed. So these are the areas that we're talking about on the order flow. Now, look at this example closely and see how large blocks of orders, these aren't retail traders, these are institutional players leaving their footprints in the market. Where you spot this pattern, you are essentially following the smart money traders. The beauty of order flow is that it removes the guesswork from your trading. You are no longer trying to predict where the market might go. You are seeing where your money is actually flowing to. Now let's see how we can set this trading setup. One of the most reliable order flow pattern you can trade is the order block setup, and as you can see, I have marked out the order blocks. This pattern forms when institutional traders place large orders at specific price level, creating a significant imbalance in price in the market. As we can see from the chart, these are the order blocks that I've marked out. The last bullish candle before the bearish move. As you can see, these are the places that I've marked out the order flow of the chart. These are areas of our order blocks. When price returns to an order block, you have a high probability trading opportunity. Look for these specific characteristics. First, watch for strong momentum moving away from the block, and as you can see, when price got to this block at this area, you can see the swift move away from that area. Shows that there is a strong momentum moving away from the block. Secondly, we have to wait for price to retrace back to that level So price has to retrace back to that level. Once price leave this area of your order block, price must retrace back to your order block. That is what we are trying to explain. Thirdly, we have to confirm your entry with volume analysis, and as we can see at this area, when price got to our order block, the volume was saying that there was a strong bearish pressure away from the order block. Even at this area, when price broke structure and came to retest the order block, we can see that there was a strong bearish momentum moving away from our order block area. Now let's look at a bullish scenario. When price broke structure, came to retest the order block that we marked out, we can see there was a swift move away from the order block with an increasing volume. And as you can see, when price came back to that area, there was still an increasing volume at this area. Now these are order blocks area. It might not be perfect, but with time you'll be able to spot these levels on your own. You can check out our videos on order blocks. It will help you to know how to spot an order block when you see one on the market. You can see this area, the moment price got to the order block, it took off. These are the areas where price will come to the order block and it will take off with an increased volume, as we can see from the chart. And this is our last area when price took off from the order block and came to retest. We can see the strong volume it used to leave away from the order block. So this is basically what our order flow is all about. Your trade management is crucial here. When you are taking a trade in this area, when you are taking a trade from the order block, you would always make sure that you use your stop loss. Always set your stop loss beyond the order block. It should be below the order block or above the order block in case of a selling opportunity. You take your stop loss, then at the other ends of the order block should be where your stop loss should be placed. Institutional traders often place their stops at these areas as well. Set your first target at a previous swing high. So your first target can be a previous swing high. That should always be your first target. Your second target can be a next significant order block. In case of a bearish trade, your next target can be a significant order block. Now you can target a significant order block, and as we can see, this is an opposing order block. It's a bullish order block, but we can use this bullish order block as a take profit area on the market. This is what we are talking about. So when you enter your trade, always remember to manage your trade. It's not only about knowing your strategy, but how to manage a trade you enter by setting your stop loss and your take profits at the right areas on the market. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe